If history repeats, we're in for a big surprise soon. Is the US stock market in a bubble? Not yet, but the stage is set for one of the wildest rides in modern financial history. Here's what you need to know, and what the smartest investors are getting ready for. Historical market bubbles follow a playbook. First, you get a dazzling technological revolution. Think cars and radios in the 1920s, PCs and the internet in the 1990s, or AI right now. Next, a boom happens in those leading sectors while the rest of the economy lags. Then, a seemingly unexpected trigger, like rate cuts from external pressures, not just domestic economic needs, pumps even more easy money into the system. Finally, mania takes over. Retail investors pile in with borrowed cash, IPOs explode, and speculative stocks skyrocket. When the party ends, it's usually after central banks belatedly tap the brakes with rate hikes. Today, the US stock market checks most of the early boxes. The AI boom is pulling far ahead of the rest of the economy. Rate cuts are looming, not because inflation is tamed, but because of political pressure and patchy jobs data. But here's the twist. The real bubble mania isn't here yet. Retail leverage and IPO fever aren't raging yet. The scary and exciting part? Based on past cycles, the real insanity could peak around 2027. That means the next 2 to 3 years could be an investor's paradise if you pick the right names. Forget broad sectors. Focus on dominant stocks riding this wave. Hardware innovators, AI software leaders, cloud giants, disruptive payment firms, and next-gen power plays. Stay sharp, stay selective, and remember, the biggest returns and the biggest regrets are made at the edge of a bubble. If you know when to hold and when to run, stay informed and stay ahead. Follow for more insights.